For years, Florida was one of the hottest housing markets in the United States. From 2020 through 2022, prices skyrocketed as people from across the country rushed to buy homes in the Sunshine State. Warm weather, no state income tax, and the appeal of coastal living made Florida especially attractive to out-of-state buyers. During this period, entire neighborhoods in places like Tampa, Orlando, and Fort Myers saw bidding wars where homes sold far above asking price, sometimes within hours of being listed. Investors also piled in, buying properties to flip quickly or to turn into short-term rentals, which only drove prices higher. But like every boom, there was always a risk of a bust. By late 2023 and into 2024, cracks began to show in the market. Mortgage interest rates climbed to levels not seen in over 2 decades, pricing out thousands of would-be buyers. On top of that, Florida's property insurance crisis, hurricanes, flooding, and extreme weather risks, doubled or even tripled, making it difficult for many families to keep up with costs. Suddenly, those dream homes didn't feel so affordable anymore. As demand cooled, inventory began to rise. More sellers put homes on the market, but fewer buyers showed up. In cities like Cape Coral and Fort Myers, prices that had soared 40 to 50% during the boom began slipping by 10 to 20%. What was once considered easy money for investors turned into heavy losses, especially for those who had bought at peak prices. The fall of Florida's housing market isn't just about numbers. It's about the people caught in the middle. Homeowners who stretched their finances to buy at record highs now face negative equity, meaning their house is worth less than their mortgage. Renters are seeing some relief as demand eases, but many still feel the ripple effects of instability. Meanwhile, first-time buyers are cautiously optimistic, watching to see if prices fall even further before making a move. So, the rise and fall of Florida's housing market tells a familiar story. Rapid growth fueled by hype and outside money, followed by a correction when reality sets in. The big question now is whether Florida is facing a temporary slowdown or the beginning of a much deeper crash. Florida's housing market was once one of the hottest in the country, but in recent months, home prices have started to slide, and fast. To understand why, we need to look at the perfect storm of economic and environmental pressures hitting the Sunshine State all at once. The first and most obvious factor is rising interest rates. Just a few years ago, buyers could secure mortgages at historically low rates, making even expensive homes feel within reach. But now, with rates hovering near 2-decade highs, monthly payments have nearly doubled for some buyers. A home that once cost $1,800 a month in mortgage payments can now cost well over $3,000, pricing many families completely out of the market. As demand cools, sellers are being forced to lower their asking prices to attract buyers. The second major factor is skyrocketing insurance costs. Florida has long been vulnerable to hurricanes, flooding, and storm damage, but in recent years, insurers have either pulled out of the state or raised premiums to shocking levels. Some homeowners now pay more for insurance than their actual mortgage. For many, that makes owning a home financially impossible. This insurance crisis has been one of the most damaging forces behind the sudden drop in demand. Next, we need to talk about property taxes and maintenance costs. With rising values during the housing boom, taxes increased significantly. And for investors or retirees on fixed incomes, that extra burden has been difficult to manage. Combine that with soaring HOA fees in many communities, and buyers are beginning to second-guess whether Florida real estate is still worth the price. Another factor is the exodus of investors. During the pandemic boom, Wall Street firms, flippers, and Airbnb hosts poured money into Florida real estate, inflating prices far beyond what local residents could afford. Now, many of those investors are pulling back, either selling off properties at reduced prices or waiting on the sidelines. Without that speculative demand, prices are naturally coming back down to earth. Finally, there's the psychological shift. Buyers who once believed Florida homes would only go up in value are now watching headlines about a housing slowdown, job uncertainty, and affordability crises. Fear itself has become a powerful force, keeping people from buying which only accelerates the decline. Put all these pieces together: high rates, expensive insurance, runaway taxes, investor pullback, and fear, and it's no surprise that Florida's once booming housing market is suddenly cooling off. The question is, how low will it go? Florida's property insurance crisis has become one of the most urgent issues shaping the state's housing market, and it's driving thousands of homeowners to the breaking point. What was once a manageable monthly bill has now turned into a financial nightmare, with many families paying more for insurance than their mortgage. So what exactly went wrong? The first thing to understand is Florida's unique vulnerability. The state sits directly in the path of hurricanes and tropical storms, making it one of the riskiest places in the country for insurers. In just the last decade, major storms have caused billions of dollars in damages, forcing insurance companies to pay out massive claims. For some insurers, the cost of these claims outweighed the premiums they collected, leading many companies to pack up and leave Florida entirely. This mass exit has left homeowners with fewer options and higher costs. Those companies that remain in Florida have raised premiums to historic highs to cover their risk. According to recent reports, the average homeowner's insurance premium in Florida is nearly 4 times the national average and climbing. Some families now pay $8,000 to $12,000 a year just to insure a modest home. Another part of the problem comes from fraud and lawsuits. Florida has been plagued by roofing scams and inflated repair claims that drive up costs across the entire system. Contractors and lawyers working together on exaggerated claims have made insurers even more cautious, adding more fuel to the fire. Because of these issues, many homeowners are now being forced into Citizens Property Insurance, the state-backed insurer of last resort. While Citizens provides coverage for those who can't find it elsewhere, it's not a long-term fix. If another catastrophic storm hits, the system could buckle under the pressure, leaving the state scrambling to cover massive payouts. The crisis has a direct impact on the housing market. Buyers are walking away from deals when they discover how expensive insurance is. Sellers are slashing prices just to attract offers. Investors are pulling out, knowing that high carrying costs make it hard to generate profits. Ultimately, Florida's property insurance crisis isn't just about rising premiums. It's about affordability, market stability, and whether families can realistically continue to live in the state without being financially crushed. Unless reforms are made, this problem could continue to drag Florida's housing market down for years to come. Over the past decade, Wall Street investors have quietly transformed Florida's housing market, reshaping neighborhoods and pricing out ordinary families. What started as a response to the 2008 housing crash has now become one of the most controversial trends in American real estate. Back in 2008, millions of homes went into foreclosure, and big investment firms saw an opportunity. Companies like Blackstone and Invitation Homes began buying up properties in bulk, paying cash and outbidding everyday buyers. Florida, with its abundance of foreclosures and attractive climate, became one of their prime hunting grounds. At first, this seemed like a good thing. Investors stabilized struggling neighborhoods, renovated homes, and turned them into rentals. But over time, the impact became clear. Wall Street wasn't buying just a few homes here and there. They were buying entire blocks, entire subdivisions, and in some cases, controlling huge portions of the local housing supply. For regular Floridians, the consequences have been devastating. First-time buyers trying to purchase a home now find themselves competing not with another family, but with billion-dollar corporations that can pay well above asking price in cash. These firms then turn those homes into rentals, charging higher and higher rents, leaving ownership out of reach for many. In cities like Tampa, Orlando, and Jacksonville, Wall Street landlords own thousands of properties. They don't just influence home prices, they influence the rental market too. When one large company raises rents, others follow. The end result is fewer paths to affordable homeownership and skyrocketing rental costs. Critics argue that this kind of corporate dominance is destroying the dream of owning a home in Florida. Families who once thought they could save up and buy are now stuck renting indefinitely, sending their money each month to distant shareholders instead of building equity. Supporters, however, claim that investors are simply responding to demand. They argue that Wall Street brings professional management, maintenance, and long-term stability to rental housing. But for the average Floridian struggling to find an affordable place to live, those arguments offer little comfort. The bigger question is, what happens if this trend continues? If corporations end up controlling too much of Florida's housing stock, the market could become permanently skewed against families, locking generations out of homeownership. For many, the rise of Wall Street landlords is less about economics and more about fairness. Who gets to own the American dream, and who gets shut out? When people think of moving to Florida, they imagine sunshine, palm trees, and endless beaches. On the surface, it feels like a dream destination. But what many don't realize is that living in Florida comes with hidden costs that can quickly turn paradise into a financial struggle. The first major hidden cost is property insurance. Florida has the highest homeowners insurance premiums in the nation, thanks to its constant risk of hurricanes and flooding. For many families, the yearly bill can climb into the thousands, even more than their actual mortgage. This financial burden catches new homeowners by surprise, and for renters, it drives up monthly rent as landlords pass those costs along. Then there's the issue of home maintenance. Florida's tropical climate may look beautiful, but it's tough on houses. Humidity, mold, termites, and constant wear from storms mean homeowners often pay more for repairs and upkeep than they would in other states. Roof replacements, storm shutters, and floodproofing add up quickly. Another hidden cost is property taxes in certain areas. While Florida doesn't have a state income tax, local governments make up for it through property taxes, service fees, and sometimes even special assessments. That means many homeowners who thought they were escaping high-tax states still end up paying hefty bills. Utilities are another big one. Running air conditioning year-round isn't optional in Florida. It's a necessity. Electric bills can skyrocket in the summer, especially in older homes with poor insulation. Water bills can also add up fast if you're maintaining a lawn in Florida's heat. Healthcare is another overlooked factor. Florida's population is aging, and while the state has many hospitals and doctors, healthcare costs are higher than the national average. For retirees on fixed incomes, this can be a serious challenge. Finally, there's the cost of insurance beyond housing. Car insurance in Florida is among the highest in the country, driven by the state's high accident rates, uninsured drivers, and extreme weather events. All of these hidden costs combine to make Florida far less affordable than it appears on the surface. That cheap house near the beach might not be such a bargain once you factor in insurance, repairs, utilities, and taxes. For families considering a move, it's critical to look beyond the sticker price and understand what it really costs to live in the Sunshine State.